All right, hi everyone. Welcome to today's live trading session brought to you by IronFX. Right, before we start, please take note of the risk warning and a disclaimer. Right, all the products here are traded on margin and carry a high level of risk, and it is possible to lose all your capital. So take note that the information in this webinar should not be considered investment advice or investment recommendation, but instead just educational material only. Right. My name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, we'll take a quick look at what's left on the economic calendar for this week. Right, it's actually been a pretty heavy calendar. We've had three major central bank announcements being made, with the first of which was the Federal Reserve, right, releasing its FOMC statement yesterday, followed by Chairman Jerome Powell's press conference as well, right? And we've also got unemployment claims coming out of the US later today. But before that, we have a second central bank, and this time it's the Bank of England, releasing their monetary policy statement as well. And finally, the Bank of Japan wrapped things up on Friday with their release of their monetary policy statement, as well as the press conference. Now, you can see here, uh, the Bank of England is due to release its monetary policy statement at 11 a.m. GMT time, where they are widely expected to maintain their official bank rate at 5%. At the prior meeting, which was in June or July, I believe, right, they had cut their official bank rate by 25 basis points, bringing it down from 5.25% down to 5%. This time, however, it looks like they're going to keep rates on hold, and this could then potentially function as a near-term bullish catalyst for the pound. So take note, if the Bank of England does indeed maintain its official bank rate at 5%, and we see a statement that's pretty hawkish as well, this could provide some lift for the pound. Right. After that, we've also got unemployment claims out of the US. That's 12:30 p.m. GMT. And of course, tomorrow, we have the Bank of Japan releasing its monetary policy statement, followed by BOJ Governor Kazuo Ueda's press conference. Now, take note, the Bank of Japan likes to keep markets guessing as to when the release will take place, right? So they don't give a predefined date and time, or rather predefined time as to when the statement will be released. But usually it's released at around 4 to 5 a.m. GMT time, and the press conference usually follows a couple of hours later. So take note, if we do see higher volatility for the yen tomorrow at around 4 to 5 a.m. GMT time, that's when they have released their monetary policy statement. And the press conference, of course, will follow a couple of hours later. Right. So we'll just take a quick review of what happened during the FOMC meeting as well. Remember, the Federal Reserve released its monetary policy statement yesterday, where they cut the Fed funds rate by 50 basis points to bring it down to 4.75% to 5%. Previously, this range was at 5.25 to 5%. So this was a pretty large cut, right? And the initial reaction when the statement was released was to see, of course, the US dollar fall and to also see bond markets and stock markets rally. However, during the press conference with Chairman Jerome Powell, right, we saw some of the moves reverse, and we actually saw demand for the dollar pick up. The dollar got bid quite strongly. And at the same time, we saw stock markets and bond markets pull back as well, right? So during this press conference, as well as during the SCP projections report, right, markets had started to realize that for the remainder of the year, we have two more FOMC meetings coming up in November and December, and it appears that the projection is telling us that they're only going to cut 25 basis points at each of the final two meetings. So total will be 50 in November, which is 50 basis points cut in September, which has just happened. And then now markets are projecting a 25 basis point cut in November, followed by December, right? So this was a somewhat lukewarm response to this, and then we can see market sort of reverse course during the press conference as well. But we'll take a look at the charts and how they're currently trading and see how where the current levels stand at. But as of now, right, we see futures gaining quite strongly, and we see the dollar pulling back as well. Right, okay. So we also have unemployment claims data out of the US later today at 12:30 p.m. GMT time, right? Unemployment claims, of course, track the number of uh, Americans filing for unemployment benefits, right? A number that is rising steadily, as what we saw from middle of May till end of July, uh, signifies or rather indicates some weakness in the state of the labor market, right? As more uh, people are filing for claims, right? Naturally, it signals some weakness in the labor market. However, over the last 6 weeks, right, we've seen unemployment claims stabilize at around 230,000, right? So, and the forecast for this week as well stands at 230,000. And while the 4-week average sits at 231,000. Now, if we do see claims spike, for example, we do see claims continue to trend higher, right? And it comes in higher than the forecast of 230,000. This is quite likely going to function as a bearish catalyst for the US dollar, which in turn is likely going to cause currency pairs like the euro, pound, Aussie, and the Kiwi to rise, along with gold prices as well. Conversely, if we do see claims come in less than 230,000, that means we have less people filing for unemployment benefits. So this typically indicates a more resilient labor market. Hence, this is quite likely then going to function as a bullish catalyst for the US dollar, which in turn, of course, is going to cause currency pairs like the euro, pound, Aussie, Kiwi to fall along with gold prices, right? So this is how we can easily interpret the data and take note. A higher number signifies some weakness in the US labor market, and this typically functions as a near-term bearish catalyst. Conversely, if we do see claims coming lower than the uh, forecast of 230,000 for this week, right, this signifies some resilience in the labor market, which in turn would usually function as a near-term bullish catalyst for the US dollar. All right, now with that, let's move on, dive into the charts and trading view, and of course, begin the analysis on the dollar index. Right, as of course we had FOMC yesterday, right? So the statement was released at 1800 hours GMT time yesterday, sorry, on 18th of September, followed by Chairman Jerome Powell's press conference at 6:30 p.m. So if you switch on over to the 30-minute chart and highlight these 2 points, on these two timestamps, right? So 1800 hours here is when the statement was released, and we can see that the dollar sold off quite strongly in response to the 50 basis point cut. However, in the next half an hour, right, which is on 8:30, 18:30, 100 hours onwards, that's when the press conference commenced. And you can see here, all the initial moves were reversed very sharply. So if we look at the indices as well, and also if you look at gold prices, and if you look at the bond yields, we will see all this reversal take place. So what was initially uh, a statement that caused the dollar to sell off strongly while causing gold prices to spike. It also caused stocks and bond markets to rally as well, right? All of that was reversed as soon as Chairman Jerome Powell started delivering his press conference, right? This was primarily due to also some dissent within the FOMC as well, right? There was also some disagreement on the size of the rate cut at this current meeting. And at the same time, there was also projections that are showing us that the Fed is quite likely to cut only 25 basis points at each of the subsequent meetings in November and December. So much smaller pace of reduction, much slower pace of reduction, right? Now, with that out of the way, let's see how where currently markets are trading, right? You can see here, of course, 30-minute time frame, dollar index dropping sharply, after which it stage of strong reversal, rising as high as 101 0.48. But since then, we can see dollar weakness has resumed, and it's been selling off quite sharply over the last few hours. Looking at gold as well, right? Looking at gold on the 30-minute time frame, and when you look at it at 1800 hours, right, we saw gold prices spike, forming a new intraday high of $2,600.09 per ounce. So take note, this is the latest intraday high for spot gold prices. And of course, we saw gold price reverse sharply as the dollar was bid up strongly. But now we've seen a lot of these moves start to reverse once more, right? And if you look at the equity markets as well, US 500 is the instrument that tracks the S&P 500 futures. So similar story here, right? Stock markets rallied when the statement was dropped at 1800 hours, after which it reversed sharply during the press conference. But now we've seen all this uh, current moves reverse, and you see stock equity futures for US climb significantly higher as well. So you can see it's been a very volatile period. It was a very volatile period during the FOMC statement and the press conference, and now we've seen equity markets, especially the futures market, pull up very strongly as well. All right. So now let's start the analysis proper on the dollar index and try and identify the key support and resistance levels. We'll start off that on the daily time frame. Right. So looking at it here, I'm on the daily time frame for the dollar index. So we can see that this level here at around 100.50 looks to be a pretty strong support level, right? Why is that the case? Right. Previously, this level was a function as a strong swing low support on 28th of December, 2023. Right. So as the dollar index was falling sharply, uh, and the last 2 months of 2023, we saw it stabilize at around 100.60 before staging a very strong rebound. Now, similar story when we saw dollar index selling off sharply as well from July onwards. It fell rapidly before finally stabilizing around this level once more at the end of August. And of course, we can see another bounce here or rebound here take place on Friday, 6th of September. And we are seeing this level functioning as support once again at the beginning of this week. So quite clearly, this is the first major support for the dollar index, which sits at 100.61, which is currently being tested once more, right? We had a strong test of this level yesterday, 18th of September, but the breakout failed to materialize, and we saw the dollar actually reverse and climb higher. However, we do see the dollar selling off strongly once more. So this is causing dollar index to make another attempt to break through the first support. So we probably have a potential bearish breakout opportunity on hand, right? There's a potential bearish breakout taking place for the dollar index through this first support. Now, if this bearish breakout does materialize, right, on perhaps on the 1 hour time frame or 4 hour time frame, we'll take a look at that later, right? Where is the next support for this index? That comes in at another significant swing low, which occurred in July of 2023, right? You can see here very clearly a significant swing low taking place in mid-July 2023, significant swing low taking place here at the end of December last year, and several occasions throughout this year as well, where you can see significant swing lows. And of course, at the same time, you can see significant swing highs taking place as well, right? You can see the market structure very clearly defined here, multiple swing high tops, double bottoms, right? Very easy to identify significant market structure such as this. Right, so that means second support for the dollar index is simply going to be at this swing low that occurred in mid-July of 2023, and that's at 99.74. Right. So what we're currently seeing is dollar selling off, the dollar coming under significant selling pressures once more, and we are looking at another test of this first support. So it does look like the dollar is going to break through, or rather the dollar index is going to break through this first support today. We are quite likely to have a potential bearish breakout take place. And should that bearish breakout take place, right, we can use a couple of levels to identify potential take profit points, right? First of which is the low of yesterday, right? We had the low of yesterday, right? Dollar index plunging as low as 100.21 before reversing sharply to climb as high as 101.50. Now, of course, this is where the dollar index reversed yesterday. So the first take profit level, should we see this bearish breakout gain further traction, right? But should we see this bearish breakout materialize and we see the downside gain further traction, the first the first take profit level can be identified at the bottom of this wick, which is at 100.21. And of course, should we see that the dollar index move even lower, then of course we'll be using this second support at 99.74 as the next potential take profit zone, because this is a strong swing low support that took place in the middle of July. So basically, we use support zones to help us identify potential take profit levels when we're shorting a particular instrument, right? Conversely, when we go long on a particular instrument, we'll be trying to look at prior resistance levels, which we can identify as potential take profit zones as well, right? Not only that, we're also going to go try and see if we can use Fibonacci retracements as well, right? So here, we can probably see if there's a retracement that we can run from here. We're running a retracement from here, 6th of September to this high here on the 12th of September. In this case, we're looking for key extension levels, right? The key extension levels sit at 127% and 161%. So we can see here the extension levels at 127% and 161% have aligned pretty well with the predefined uh take profit targets as well, right? Good to see here, 127% extension sits pretty close to 100.21, and also 161% extension also sits very close to the second support. So these extension levels also add further significance to the strength of these support areas. So take note, right? These are support areas, and the Fibonacci extension levels add further significance to the strength of these support areas here. So that is why I'm identifying two take profit targets, right? Should we see this bearish breakout materialize, right? Of course, if the dollar index drops all the way down to the second support, that's great. But however, take note, we do see an intermediate support level here at 100.21. So as to be prudent, right, it'll be good to identify the first take profit level for any short dollar index trades at around the 137% extension level. And of course, should we see the dollar index fall even lower, then we're going to be targeting the Fibonacci extension at 161%, which is also a swing low support that occurred on mid-July of 2023. Now, so these are the key support levels which have been used to identify as potential take profit targets, and we clearly see the bias for the dollar index to the downside. Now, what about resistance, right? We can see here very clearly there's like a double top market structure here. So the first resistance for the dollar index is simply this like multi-swing high level, resistance level at 101.78. Now, a little bit higher up, I also see another overlap resistance level right at around 102.60, right? You can see this is a pretty significant overlap level, which has previously functioned as resistance in early Jan, support in mid-March, support once again in early August and mid-August before finally giving way. So you can see here, the dollar index has reacted off this level several times, thus creating a pretty significant overlap level. Now, we can also now run a Fibonacci retracement on this big downtrend here. And we see a nice big downtrend here, series of lower highs and series of lower lows. Right, so we're going to run a retracement starting from this swing high here on the 26th of June, going down to the swing low here. All right, right now, this swing low is still the lowest point. Yep, so let's pull up all the fibs. And we can see that the 23.6% retracement aligns very well with the first resistance, while the 38.2% aligns very well with the second. So these two resistance levels, these two retracement levels, Fibonacci retracement levels, add further significance to the strength of these resistance zones. So let's just keep 23 and 38, right? So of course, quite clearly, the bias for the dollar index is to the downside, right? After an initial drop during the FOMC statement, we saw the dollar index reverse course and was bid up very strongly, rising as high as 101.46 earlier today. But this rally or this rebound in the dollar index has now clearly been reversed, and we see the dollar index making another attempt to break through this first support at 100.61. So we have a potential bearish breakout opportunity, and should this downside action gain further, or should this downside momentum gain further traction, we are going to be using the extension level at 127% as the first potential take profit target. And of course, should the dollar index slide even lower, we'll be using the 161% extension level as the next potential take profit target, right? So these are the key levels for the dollar index here on a daily time frame. Now let's just quickly look at it on the 1 hour time frame, right? 1 hour time frame, right? We can clearly see this dollar index breaking through the support level, right? Maybe this is good enough to get a confirmation that the bearish momentum is indeed picking up, right? So it's probably a good idea. We probably have a good opportunity to capitalize on this downward bias or downward momentum for the dollar index, right? You can see already on the 1 hour candle, it has cleanly broken through the first support, and it looks like it's going to fall even lower. All right, so these are the key levels for the dollar index as of today on the daily time frame. And we currently have a potential bearish breakout uh, scenario in play, right? Okay, so with that, now let's take a look at gold. Then we'll look at the euro and of course the pound as well, right? Since we've got the Bank of England lining up today, then we'll also take a look at dollar yen. All right, so let's move on over to gold. Right, remember, as I mentioned earlier, gold has made a new intraday high at $2,600 dollars and 9 cents. Right, so it's a new intraday high here, right? And we can see once again, spot prices rising strongly towards this level once more. Now, with the price rising up towards this new intraday all-time high, how could we possibly identify the next resistance level? So in such a scenario, we're going to have to rely on the tools such as Fibonacci projections and extensions. But in this case, I think we're going to have to move into the monthly time frame, right? Because we can see the moves in gold are really extended, right? We're seeing a very strong uh, appreciation of gold prices, right? Since November of 2022, and especially in this year as well, from February onwards, we've really seen gold prices skyrocket very strongly, right? We can also see it broke out of a multi-swing high resistance, right? Very cleanly on March of this year, right? This was a strong resistance level with spot gold prices running into resistance several times, right? First of which was here, the first swing high resistance, August of 2020, second swing high resistance on March of 2022, another swing high resistance on May of 2023, and also resistance once more in December of last year. But this level was cleanly taken out in March of this year, right? So we had nice bullish breakout above this level or this prior swing high resistance, right? But now we're trying to identify the next major resistance, right? We can see intraday, right? Intraday all-time high here. Now, so in such a scenario, we're going to try to identify the next major resistance by, I believe, we're going to use a Fibonacci projection. So, right, we can see here, projection involves 3 points. So we'll start at the lowest point, which is here, 3rd of November, 2003, going up to September 2011, and ending at this low here, December 2015. Now, when we come to see where gold prices are trading, we can see it quite clearly. It has climbed above 61 and 78.6% projection level, but the 100% projection aligns very close to where the intraday high has formed. So let's just keep this on for now. Right, you can see it's getting pretty tough to identify potential resistance areas because simply the gold prices have really skyrocketed. Now, usually we would also try and run a retracement here on this downtrend and try and use extension levels. So let's try that as well. So we're going to run a retracement from here, this high on September 2011, going down to this low here on December of 2015. We're going to be looking for key extension levels at 127% and 161%. But once again, very clearly, gold prices have exceeded these two extension levels as well. So we can't use this. Maybe there's another projection we can use from here, like this low here on December 2015, going up to this high on August 2020 and ending with this low here on September 2022. Right, so let's pull up all the projections once more. Right, you can see in this projection, 61 and 78.6% have been cleared, but we see 100% projection is still valid, and that sits at $2,643.74 per ounce. So we can use the 100% projection to help us identify the next resistance barrier for gold prices. So that means this resistance barrier here at 100% projection can be used as a potential take profit target. The 2643.74. right? So this is how we've used a projection here to identify a potential resistance barrier, and this resistance can be used as a potential take profit target. Now, what about something a little bit higher? It seems to be a little bit challenging, right? Let's see if we can go down to the weekly time frame and see if we can adjust or try and find something else. Maybe we can run a projection over here. Might not be the best one, but let's try anyways. From here, this swing low here on October 2023, going up to this high on May 2024 and ending with this low here on June 2024. So once again, let's look at all the projection levels. And we can see here, okay, 61.8% projection sits quite close to this 100% projection. And at the same time, we have 78.6 at 100 as well, right? So let's just keep all these projection levels on for now and highlight this as a zone. So the first major resistance for spot gold prices, right, via which has been identified via two projection levels, appears to be around $2,640 per ounce, right? We have a projection level at 100% and another projection level at 61.8% to identify the first resistance barrier. So this resistance barrier here can be used as a potential take profit target for spot gold prices here, right? Especially if it breaks above its intraday high, right? The intraday high is at 2,609 cents. If it breaks above this intraday high, we can probably expect gold prices to rise up towards this first resistance barrier, which we can use in the identification of a potential take profit zone. And of course, should gold prices continue to rise higher, then we would be using the 78.6% as the next potential take profit target. And then we'll be using, of course, ultimately the 100% projection as the next potential take profit target. Right, so you can see here, the moves in gold are clearly extended. And in terms of support, I see a nice pullback here taking place. Uh, at the end of August at around $2,493 per ounce. This is where we can identify the first support. And the second support for gold is probably maybe as a pretty decent overlap level here. Maybe this looks a little bit better on the daily time frame. So let's try and fine tune this level by looking at it on the daily time frame here. Right, so I will adjust the first support because on the daily time frame, this actually looks like a very nice overlap level. Right, this is an overlap level at $2,483. We can see previously this level functioned as resistance in July of 2024, resistance again in August of 2024, and once more functioning as resistance in mid-August, 14th of August as well. After which, it proceeded to function as support on 22nd of August and on 3rd and 4th of September as well. So this creates a very nice overlap level, which we can use in the identification of the first support. So that's at $2,483.65. Now, what about the second support? And I see a nice overlap level here as well. Once more, pretty decent overlap level at $2,362. We can see previously this level functioned as resistance on 20th and 21st of June, after which, after the breakout occurred, it proceeded to function as support on 8th and 9th of July, and also again on 25th and 26th July. And even here, you can argue that on 5th of August, this level functioned as support once more. So very clearly a very strong support zone here, which you can use in identification of the second support. Right. So we see gold prices in a very strong uptrend, right? On a daily time frame here, probably we have a nice ascending trend line as well, right? Yep, it's a pretty decent ascending trend line over here. In fact, maybe should I look at it as a bullish channel? Right, let me see. Let's try it out. Perhaps we may just be able to try and mark out a bullish channel as well, right? Okay, yeah. I think yeah, we can see here uh gold prices testing the upper trend line of the bullish channel here in mid-April and coming quite close to this level here at on 20th of May. So I guess pretty decent bullish channel, not the best, right? Because we only see a few touches to the bottom and just a couple of touches on the top here, but we can see the general bullish channel being formed here. All right. So once again, we are seeing clear, very overextended moves for gold to the upside, right? So that's why we're forming all the analysis on the daily, weekly, and monthly timeframes here for now, right? We're really trying to identify significant resistance barriers and significant support levels, right? So once again, spot gold prices made a new intraday all-time high at $2,600.09 yesterday. Uh, this instrument is now currently racing towards this level once more. If we do see this uh, intraday high get taken out, we could potentially see gold spot prices rise up towards the first resistance barrier here at around $2,640 per ounce, which is where a potential take profit target can be identified for any long gold trades, right? And because we see price pulling back here, I would like to highlight this as an intermediate support here as well. Right? This is an intermediate support level at around $2,559.24. So that means if we do see this bullish breakout take place, right? We do see a bullish breakout take place, then identifying your stop loss slightly below the bottom of this wick here. This bottom of this wick goes as low as $2,547.05, right? So identifying your stop loss slightly below the bottom of this wick here is probably a pretty decent area to do so, right? You're giving yourself a little bit of a buffer, slightly below a recent support area, and trying to capitalize on a potential bullish breakout with a target, with a potential target at around $2,640 per ounce, right? So these are the key levels for spot gold prices here. Now let's move on over to the, or let's look at the pound first and dollar yen, right? Because we've got two central bank meetings coming up, right? We've got the Bank of England in a couple of hours, right? That's at 11 a.m. GMT time. So 11 a.m. GMT time, the Bank of England will release its monetary policy statement where they are expected to maintain the official bank rate at 5%. Remember, at the prior meeting, they cut or they reduced the bank rate by 25 basis points, so bringing it down from 5.25% to 5%. However, this time round, it seems like they're going to keep rates on hold. Now, if they really do keep the official bank rate on hold at 5%, and we see a statement that's pretty hawkish as well, we are quite likely to see this recent bullish momentum for the pound continue as well, right? So take note, we can see it's already attempting to break above a prior resistance. This was a swing high resistance that was formed on the 27th of August, right? It did attempt to break out of this level yesterday, but this currency pair pulled back. But now we can see once again, it's making another attempt to break through this level here. So we have a potential uh bullish breakout for the pound as well. Remember, if you're seeing a potential bearish breakout for the dollar index, right? If you're seeing a potential bearish breakout take place for the index, we're also likely to see uh the opposite for the currency pairs such as the euro, pound, and dollar yen as well, right? So we'll take a look at that later. So we can see we have a potential bearish breakout scenario at hand. Right? And let's just see, identify where could be a potential price target, right? Let's try and identify a potential price target. If we do see a bearish breakout take place for the pound, right? Especially with the central bank meeting coming up, right? If we see a statement that's pretty hawkish, and we also see the Bank of England, of course, keep rates on hold, we're quite likely to see this currency pair break higher. Oh, sorry, hang on. This is I'm on the euro. Let's come back to cable. Yep, here we go. So when we look at this currency pair on the 1 hour time frame, we can see now, right, on the 1 hour time frame, it does look to have made a clean break above 1.3260. So we could see potentially a nice breakout take place. So now that it's sort of cleared this level here, right? Generally, uh, there's a few ways to identify a stop loss level. You can either identify the stop loss here. There's a nice swing low taking place here at around 1.3170, right? It's a nice swing low taking place here at 1.3170, but you'll be using the bottom of this wick. You can see the bottom of this wick drops as low as 1.3153. So there's two ways to play this. If you want to identify a stop loss level, you can identify it underneath 1.3153, or if you wish to run a slightly tighter stop loss, right, you'd be using that. You'll be using this breakout level as a placement. So you'll be looking to identify the stop loss level slightly below this breakout level here, perhaps slightly below the bottom of this 1 hour candle here, which is at 1.3240, right? If you do not wish to keep a wider stop loss for potential bullish breakout opportunity, right? Using the bottom of this candle here at 1.3240 might be a suitable level to do so, right? Remember, don't place a stop loss at exactly the bottom of the wick. You need to give yourself a little bit of a buffer. This can be anything between 10 to 15 pips, right? So identifying the stop loss slightly below 1.3240, or if you want a slightly wider stop loss, identifying it below this support level here at 1.3153. Remember, another 10 pips underneath this level might be a suitable area to do so. Right. Now, what about resistance? Where's the next resistance level coming in for this currency pair? Right. For that, we're going to have to zoom out a fair bit and look at this spike here that occurred on March of 2022, right? I think this is where it is currently being tested as well, right? Yeah, we can see here, there's a resistance level here. There's a swing high resistance. Okay, now let's zoom into this area. I actually see a nice swing high resistance taking place here on 23rd of March 2022. And then when I stretch it all the way here, it's sort of like an overlap level as well, right? We see a pretty decent overlap level at 1.3309, which we can use in the identification of the first resistance. So this level is going to be important as well because it can be used or identified as a potential uh take profit target as well, right? So we can see here the bullish breakout looks to have taken place, right? Especially when you look at it on the 1 hour time frame. So your first take profit target can be identified at this overlap resistance at 1.3309, right? We've talked about where we can place the stop loss levels. And should we see this currency pair continue to climb even higher, right? There's a sort of pullback resistance here that has taken place at the end of February 2022. This is at 1.3417. So this is where the next resistance is quite likely going to come in for this currency pair for the cable. Right, so we can see how we're using prior swing high resistances, overlap resistances, or pullback resistances to help us identify potential resistant barriers, which then in turn can be used as potential take profit targets. Now, I see a nice downtrend here. Right, I see a nice downtrend here. We can probably run a Fibonacci retracement starting from this high on 6th of September, going down to this low here on 11th of September. What we're looking for is key extension levels, right? So we can see 127 aligned very well with the first resistance, while we also see 161 sitting slightly below the second resistance here. So, right, so these extension levels add further significance to the strength of these resistance barriers here. So take note, the extension levels here help us identify, or rather adds further significance to the strength of this resistance area. So that means we're identifying our take profit level at a potential resistance barrier. All right, so these are the key levels here for uh, the cable on the daily time frame, right? And we just quickly look at it on the 4 hour time frame. Right, we can see, right, it looks like it has indeed made a very nice clean bullish break above this level here, right? So either you can identify the stop loss just slightly below the breakout level, which is at 1.3260, maybe a 10 to 15 pip buffer underneath the breakout level to try and capitalize on this upward momentum, right? And then targeting your take profit at the first resistance at 1.3309 is probably a suitable area to do so, because it also has a presence of a Fibonacci extension at 127%. All right, so these are the key levels for the cable. Right now, let's move on over to dollar yen, right? Since we've got Bank of Japan wrapping things up with central bank meetings tomorrow. Now, remember, the Bank of Japan does not schedule a precise time for the release of its statement as well as the press conference by its governor, right? So it's a little bit of a cat and mouse game. So traders should be on sharp alert tomorrow during the Asia session, especially if you have any yen positions, right? If you've got any dollar yen or any of the yen crosses on, take note, this would be a very volatile period for the yen, and we may be inadvertently be stopped out, right? If you're not prepared for this news announcement, right? So what we've seen at the prior meeting, right? The prior meeting for the BOJ took place on 31st July, Wednesday, right? That time the prior meeting occurred on a Wednesday, 31st of July. This time the current meeting is on Friday, the 20th of September. So we can see here at this meeting in July, 31st of sorry, on 31st July, Wednesday, the Bank of Japan raised its key policy rate, right? And at the same time, they also announced a reduction in their bond buying program as well, all of which adds to significant appreciation of the Japanese yen. So the Japanese yen is appreciating strongly. It causes currency pairs like the dollar yen to fall sharply. And of course, we also can expect the yen crosses such as pound yen, euro yen to be falling sharply as well. So that's what happened on 31st of July, right? And we saw the yen gain significantly. So if the yen, the value of the yen is appreciating very strongly, we can of course expect this currency pair, the dollar yen, to drop sharply as well. We can see here, although there have been strong retracements to the upside, but generally we can see the downtrend is still intact, right? We see a series of lower lows, series of lower high, a series of lower highs, series of lower lows, and at the same time, we can see this currency pair trading underneath the bearish Ichimoku cloud as well. In fact, it's a pretty nice descending trend line here as well, right? I can point out or highlight a very nice descending trend line here. So this is going to be key as well. This further highlights the downward momentum. And in fact, actually, this is probably looking like a bearish channel as well, a pretty good bearish channel. There we go. Then we can identify as well. Right, so you can say this was more like a bear flag here. If you look at this here, this retracement to the upside, if you look at it, oops, this retracement to the upside that occurred on 5th of August till the 20th of August, right? So for a period of 3 weeks, right? This bullish channel here, right, was actually a nice bear flag, right? We saw a nice bear flag here. And finally, when it got taken out, we saw the downtrend resume once more, right? And currently, dollar yen is trading within a pretty strong bearish channel here. Right, so this is on the daily time frame, right? We can see that it is, of course, reversed quite sharply off its highs of about, what is this, 162, and it looks to be pushing down lower. Remember, if dollar index continues to slide lower, right? Of course, if dollar index continues to slide lower, we can also expect dollar yen to fall as well. And if tomorrow as well, if we do see the Bank of Japan raise interest rates once more, or perhaps come out with a very hawkish uh, statement and press conference, that could trigger another round of strong demand for the yen, right? So there's strong demand for the yen. We can expect dollar yen to pull back quite strongly as well. Right, for now, right, it's continues to trade within this bearish channel here. And the bias for this currency pair is as of now quite clearly to the downside. Okay, so first support is over here at 140.60, and we can see here this is like a multi-swing low support level. Right, we can see a nice swing low taking place here at the end of December 2023. Dollar yen was falling sharply as well back then, before stabilizing around 141, before staging a very strong rebound. Once again, it managed to find support here previously, well, in on Monday, Monday 16th of September, basically stabilizing around this level here before staging a strong rebound for a couple of days. So very clearly, this is the first major support for the dollar yen. And where I do see the first resistance is at this like pullback level here, right? This level here previously functioned as pretty decent support on 5th of August, and then again on 28th of August. What was previously a support level can then potentially function as resistance, which is what has happened on 9th of September, 10th of September, and as well as yesterday, 19th of September as well. So this is how we've identified the first resistance for dollar yen, which is at 143.86. And the second resistance for dollar yen is at this swing high here that occurred on 2nd September, 146.85. Right. So if dollar yen reverses, right, tonight or perhaps tomorrow, right, if we do see a bearish reversal take place, we can then target the first support as a potential take profit zone for any short dollar yen positions, right? So if we do see the dollar yen reverse tomorrow sharply, right, we'll be looking to target the first support at 140.48 as a potential take profit zone for any short trades. But conversely, take note, if the Bank of Japan doesn't raise rates and if they come up with a fairly neutral statement and press conference, that could trigger a sell-off in the yen. So if we do see the yen sell off, that means dollar yen is quite likely to rise and probably rise up towards this intersection that's defined by the upper trend line of the bearish channel and the first resistance at 143.86. The first resistance now looks to be a very nice overlap level here. Now we can also run a Fibonacci retracement on this downtrend. Right, there's a nice downtrend here taking place from 3rd of September, going down to this low swing low on 16th of September, Monday. Right, let's pull up all the fibs. I believe it should be the 50 or 60 that's probably that we're going to be using. Right, we can see here, right, dollar yen has already surpassed 50% yesterday, so we're going to be using the 61.8%. So this is a pretty strong resistance barrier that also has the presence of a 61.8% Fibonacci retracement. Right, so take note. So if we do see the Bank of Japan maintain rates tomorrow and we see a fairly neutral statement and press conference, that could potentially cause the yen to sell off. So the Japanese yen is selling off. It's quite likely going to drive dollar yen higher. And if that occurs, right, if that potential scenario occurs, then we would be targeting this resistance barrier that's identified by the overlap at 143.86, the upper trend line of the bearish channel, and the 61.8% Fibonacci retracement as a potential take profit zone for any long dollar yen trades. Conversely, if they do raise rates once more and we see a fairly dovish statement and press conference, we can then expect dollar yen to reverse and drop lower. And should we see it fall, we are then going to be using the first support at 140.48 as a potential take profit zone for any short dollar yen trades. All right, so that's these are the key levels for dollar yen for today. And once again, we're doing everything on a daily time frame, but simply we are seeing a lot of extended moves in the currency pairs, in gold, and even in the indices, right? So we are trying to identify key and significant support and resistance areas. And for now, that only seems to be possible on the daily time frame. For gold, we saw, right, we even had to switch to the monthly time frames to try and identify the next resistance barriers. All right, so that's what we have for dollar yen. We've covered cable as well. Right, let's all right, before we continue, right, if there's any requests, of course, for any other currency pairs or instruments for the indices, do let me know. Right, do drop them in the chat box. I'll be more than happy to go through the analysis with you. Otherwise, we'll look at Germany 14 US 500 now. And before I do that, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll proceed with the analysis on Germany 40, US 500, and of course, if you have any other requests as well, right? I'd be more than happy to go through your requests as well. All right, great to see the feedback come in. Right, thanks everyone. Right, truly appreciate it. Just going to keep it running for a little bit longer. WTI. All right, sure, Cleon. Yeah, we can cover WTI as well, right? Let's touch on the commodities as well. We covered gold, so let's start with WTI oil. Then we'll cover the DAX and US 500. All right, great, awesome. All right, great to see the requests come in, and also once again, thanks very much for the feedback as well. All right, truly appreciate it. Just give me a second while I try and where do we go? All right, okay. So we had a request for WTI oil, so let's start with that. Right, so we've seen Crude prices come under significant selling pressures since the second week of July, and we see a nice series of lower highs, lower lows, and we've seen a nice rebound since last Wednesday as well, right? So we can see significant support levels and resistance as well, right? So first of all, right, I see a very nice descending trend line as well, right? There's a nice descending trend line to identify or highlight the downward momentum. And of course, the bearish Ichimoku cloud highlights the ongoing bearish momentum as well. But of course, in any downtrend, we can also expect significant retracements to the upside, right? From 7th of August till 13th of August, we saw crude WTI oil reverse around $73 per barrel, rising as high as $80 as well. So nice 10% move here in a matter of a week or so, right? Then similarly, we saw another nice retracement, strong retracement to the upside from about $72.70 going as high as $78.23. Another almost 8-9% move in a matter of 3 to 4 days. So you can see very strong retracements for WTI oil in this downtrend as well. And this is something that we're seeing as of last Tuesday as well, right? So WTI oil stabilized around $66.50 per barrel last week, and it's gained almost 10% since then as well. Another strong move to the upside. Now, what was previously a strong support level, right? You can see here, right? This level here, this level here at $73.05 previously functioned as a strong multi-swing low support, right? You can see here the first swing low hang on. The first swing low taking place here on 5th of June, second swing low taking place here on the 8th of August, and the third swing low here on the 23rd of August. This was functioning as a very significant support area or level, which now can potentially function as resistance. So that's how we've identified the first resistance for WTI oil. So that means if you've gone long oil, right? If you've gone long on WTI oil as of last week, right? As of last Wednesday or Thursday, or perhaps at the beginning of this week, right, we can identify a suitable take profit zone at this resistance barrier here, right? This resistance barrier at $73.05 is a pullback resistance level that we can use in identification as a potential take profit zone or take profit target for any long WTI oil trades. Now, at the same time, there's another nice downtrend here that I'm going to run a Fibonacci retracement from. This swing high here on 26th of August, going down to this swing low here on the 10th of September. We can also see that there's a 50 and 61.8% retracement level. Okay, 50 is not close to it, so let's not keep it on. But okay, actually, I see something else. I'll explain it a little bit. We're going to keep 50 and 61.8% because the 61.8% retracement adds further significance to the strength of this first resistance. And at the same time, I would like to highlight an intermediate resistance level that's identified by the 50% retracement and this other swing low here that occurred on 1st of February, right? You can see here this swing low taking place here on 1st of February, WTI crude oil falling sharply before stabilizing around $72.10 per barrel before staging a very strong rebound. And found support here again. You can see that on 5th of August, finding support at this level once more. So what was previously a support level could now potentially function as resistance. And if we do see a clean break above this level here, remember this level is also accompanied by a 50% retracement level, then we can probably expect WTI oil to rise up towards this first major resistance. So we may have further bullish momentum that's going to cause this commodity to rise higher. So take note, it is currently testing an intermediate resistance zone that's identified by the 50% retracement, as well as this pullback resistance here. But if we do see a nice clean break above this level, then we're quite likely to see WTI oil rise up towards its first major resistance at $73 per barrel, right? And there's a strong area here that also has the presence of a 61.8% Fibonacci retracement, right? In terms of support, right? The first support can be identified at this pullback here, right? We can see on Wednesday, well, yesterday, right, WTI oil stabilizing around $70.15 per barrel before staging a nice rebound today. So this is where we can identify the first support right? So that means your stop loss should be placed slightly below it here. And you can see the bottom of this wicks going as low as about $69.70 per barrel. So you should be ideally placing your stop loss slightly below a major support zone and ideally below this bottom of this wicks here. And of course, the second major support for the WTI oil is coming in at this swing low that occurred on Tuesday, 10th of September. Right, if we zoom out a little bit, let me see if this level coincides with anything else. Actually, yes, you can see here this level, here the second support actually coincides with another significant swing low that occurred in March of 2023. Of course, we see the bottom of this wicks dropping pretty low, right beyond $66.50. But generally, you can see the body of the candle here, the daily candle holding up at this level here. So you can see this is a pretty significant multi-swing low support level here at $66.50. But for now, the momentum for crude prices is to the upside, and we may see this bullish momentum continue, right? So take note, if we do see it climb above the 50% retracement, it's quite likely going to make a run for the first resistance at $73 per barrel, which can be used as a potential take profit target, right? And of course, on the support side, stop loss should be placed slightly below yesterday's low, right? Yesterday's low is at around $69.65. So to give yourself a little bit of a buffer, perhaps you would identify the stop loss slightly below the bottom of this wick. Right, let's see on the 4-hour time frame if you can identify a more suitable area. I think this is fine, right? You can see here, this is a nice like support area here that occurred. Yes, that's been in place since Monday, 16th of September at $69.54. You can identify a suitable stop loss slightly below this level here. Right, you can see on the 4-hour time frame as well, a nice support level here. So usually we'll identify the stop loss for any long trades below a major support area. Right, so this is what we got for WTI oil. And okay, let's wrap things up with the US 500, right? Similarly, right, as we mentioned here, in a 30-minute time frame, right, we saw initially the initial reaction to the FOMC statement was for stock markets and bond markets to rally, right, with US 500 hitting back then. I think this was, I believe, a new intraday high back then on 5,705. I believe so. Yes, that's right. And then we saw, of course, markets pull back, but now we are seeing futures market recover, right? Since the European session, we've seen futures market recover and stage a pretty strong uptrend as well, right? And it's broken above, right? It's broken above this prior intraday high. So if I go on the daily time frame, I'm quite certain I'm quite certain that's right. See, this was a new intraday all-time high that was formed yesterday at the onset of the FOMC statement. And we can also see that US 500 has also broken through the prior swing high resistance, right? This was the prior swing high resistance that occurred on 15th of July, and it has functioned as resistance since then. Even here, you can see 17th of September, US 500 rose pretty strongly, but got rejected at this level once more. Now, what was previously a significant resistance barrier, such as this level at 5,667, can now be identified as a support, right? So this is the first major support for US 500. And of course, with markets now rising very strongly, equity futures rising very strongly for the US, how can we possibly identify the next resistance barrier? So once again, right, we're going to be relying on Fibonacci tools such as extensions and projections. So let's start with the extension first. So to find extension levels, we're going to run a retracement. Highest point is here on 3rd of September, going down to this lowest point on the 6th of September. Key extension levels sit at 127 and 161%. So quite clearly, the first take profit target for US 500 can be identified at this level here at 5,728. Now we can also run a Fibonacci projection. Right, this projection will start from the lowest point here, 5th of August, going up to the high on the 3rd of September, and ending with the low on 6th of September. Now, once again, we can see the 61.8% projection aligned very well with the 127% extension, and we can see the 78.6% projection aligned very well with the 161% extension. So when you have two different Fibonacci levels aligned at a similar price zone or price point, this is a Fibonacci confluence. It simply means we have more than one Fibonacci level, and it actually emphasizes the strength of this zone. So these zones are actually resistance zones, And when you have more than one Fibonacci level at a particular price zone, it amplifies the strength of that zone here. So these are major resistance barriers which can be used in the identification of potential take profit targets for the long US 500 trades, right? So quite clearly, US 500 is a strong bullish momentum, and we can then use these resistance barriers to help us identify suitable take profit zones as well. So first resistance. So first resistance at 5,737 can be used as the first take profit target. And of course, should we see equity markets move even higher, US 500 climb even higher, we can then use the second resistance as the next potential take profit target. All right. So, right, that's all I've got for today. Right. Thanks everyone for tuning in to today's session. Right. I hope you found this really useful. Do look out for the Bank of England's monetary policy statement that's out at 11 a.m. GMT time. And of course, the Bank of Japan's uh, announcement as well. Remember, there's no fixed schedule, but we can expect the BOJ's statement to be released at around between 4 and 5 a.m. GMT time. And the press conference usually follows a couple of hours later. All right. So once again, thanks everyone for tuning in. Hope you have a great trading week. And yeah, do watch out for these upcoming central bank announcements because they're going to inject a lot of volatility into markets as well, especially for the currency markets for the England and Bank of Japan, where you can expect the pound and yen to be significantly impacted as well. All right, that's all I've got for today. Thanks, everyone. Take care. Have a great trading week and catch you all in the next session. All right. Welcome, Trion. Thanks so much. All right, take care, guys. Have a great trading week, and of course, most importantly, have a good weekend as well as we wrap up as we come to the end of the week. Have a good rest and spend some quality time with your friends and family as well. All right, take care, everyone. Have a great trading week, and catch you all in the next session.